Well, this is something you don't see every day. In fact, this is something we haven't seen for over 55 years, as the amount of gold being purchased this year is at its highest level since 1967, when the world was still on a gold standard. That's right. And the crazy part is we have no idea who is buying all this gold. Central banks have bought a record amount of gold in just the last quarter, buying almost 400 tons. This is more than quadruple the amount from just 1 year prior. Taking a look at this chart, we can see since 2010, each quarter, so we can look at the different quarters, the colors in each of these bars represents quarter 1, 2, 3, and 4. We are currently just at the end of quarter 3 for 2022, obviously. And look at the size of that blue bar compared to all the other blue bars. So going back all the way to 2010, no third quarter has looked anything like this most recent third quarter. And on top of that, it hasn't looked like any quarter since 2010. And we're not even done with the year yet, and we are already at a record for the year's total going all the way back. Now, here's the little known truth about gold. Central banks, while they're the biggest printers of fiat money, are the biggest purchasers of sound money. So they quite literally create paper dollars, give them to their citizens and say, you use this garbage and we are going to use it to buy shiny yellow metal ourselves and store it up for ourselves. They haven't always done this. In fact, around the year 99 is when central banks became net buyers of gold. They had been net sellers prior to that. Literally can't make this up. I was literally just outside on my hands and my knees listening to the sidewalk as the internet installing contractor, he was on the other side of the street ramming a rod through some pipe in the ground, asking me to listen to see where it was thumping on the other end under the ground to try and figure out where to dig in. This has been ridiculous, what I've had to go through to try and get internet. This is why I hate monopolies. And monopolies are created by governments. If there were no regulatory restrictions on who could give me internet, there'd be competition, and all of these garbage companies would go out of business, and I'd have fast internet. And I've had it last month when I tried to give them money and I couldn't because they couldn't figure out how to give me internet. Absolutely ridiculous. So where was I? Central banks are the biggest buyers of gold. They've been buying gold on net since 1999, and coincidentally, that is when the price of gold bottomed. If we take a look here, this is a chart of gold since 100 years ago. Let's zoom in. We can see here that there was this big bear market here in the late 90s, and right when it bottomed and started this massive leg up was because that's when central banks on net became buyers of gold. So central banks are the biggest money around. So you want to know what'll happen, you follow the money. You want to know the big moves that'll happen, you follow the big money. Central banks are the biggest money there is, and when they decide to make moves, prices eventually follow. But the key is they don't want prices to move all at once immediately. They want to be able to get in while the prices are still low. And then when the plebs like you and me jump in and drive the price up, then they are already holding all of the bars. But not only was demand for gold strong from central banks, it was also strong from jewelers and buyers of gold bars and coins. So let's take a look at some charts from the World Gold Council. We can see here a few different breakdowns of gold buying categories. We've got jewelry and fabrication going on right here. We've got total bar and coins going on right there. Here we go. We can see 2020 was a pretty low year historically. And then here's the number for central banks and other institutions. If we isolate and just look at bar and coin, we get a little bit of a better picture about 2022 so far. Again, the year's not over in relation to past years. We have to go back to 2013 before we get to a number that is higher than we are at right now, and the year's not over yet. We also saw, this is a big deal here in India, a big jump in gold demand. And we can see here from 2020, there's a big jump in gold demand. And keep in mind, India is huge here. India is a place where people do not trust banking, do not trust the government. They keep a lot of their own personal wealth, citizens, in gold jewelry, in coins. Wealth is passed down through families from generations with gold, jewelry, and coins, and bars. India, culturally, they are massive gold buyers, and there's over 1 billion people there. So it's a big world out there, and little few 300 million people who live in the United States do not have the traditional and the common financial habits compared to the rest of the world. We're a little bit of an anomaly here, with Americans just despising physical gold. Places that have much larger populations with much older histories are huge gold buyers, like China and India. The reason why gold buying jumped in India is because of a loophole that allowed gold to be imported as a platinum alloy at a lower custom duty. So you gotta take advantage. You gotta love those tax loopholes that pop up and allow you to avoid duties and tariffs. So gold demand is up, and the big question is, who is the buyer? Well, it looks like it is probably Russia or probably China. Now, we know that most central banks publicly report their gold holdings and their purchases, and it's just taken many times on trust. But there are some countries that don't regularly report all their gold purchases, like China has been known in the past to make many purchases, and then suddenly they just announce, oh, we actually have way more gold than we reported our buying was previously, and so their official holdings jump up, and the assumption is that they just were buying without reporting how much they were buying. And it's not just central banks, but some other official institutions as well do not publicly report their gold holdings, and sometimes they just do it with a lag. So why has that not resulted in massively higher gold prices? Well, we've got two reasons, and they both come down to supply and demand. How the price of anything is determined by supply and demand. So we're seeing demand get to levels it hasn't been at for decades, in the case of central banks, since before the gold standard ended, the 60s. But there's another side of that coin, which is supply. So who is selling if so many people are buying? Well, number one, we've got year-to-date mine production at a big high here, historically speaking. 2018 was obviously the peak, and it dropped off since then, but mines have ramped up production since then, and it's getting close to the 2018 high. And mine production is a lot higher right now than it was for many years before that. However, that mine production is something that is unsustainable in perpetuity because there have not been any major gold discoveries in a very long time here. And so what we know is in the ground is largely accounted for in the current gold price. What we know we can get out of the ground from all of the mines, all of the proven resources, we know what's in the ground. And so we know how much will be coming out of the ground as production moves along. And so it is only a matter of time before that starts to run out. And if we don't make any major new discoveries soon here, then what we know is in the ground will start to be factored in, which would mean very little supply, and that would start to move the price up as well. But that's not the only factor. The second factor is ETFs. Global ETFs saw outflows during Q3 of this year, bringing the collective ETF gold holdings down. In fact, we've had 5 straight months of outflows. Who owns gold ETFs? Well, there are some big money players like Bridgewater. Ray Dalio's hedge fund uses GLD to hold its gold, but for the most part, gold ETFs are going to be held by retail individuals. Certainly, even if it's institutions, smaller money than the central banks. The people who know what's up about physical gold are the ones with the biggest money, and they know when push comes to shove, if you don't hold it physically, you don't hold it. You are participating mostly in gold ownership, not gold ownership. And so I always say, keep it physically unless you're somewhere where you absolutely can't, where it's more dangerous for you to keep it physically, like if you're renting in an apartment or something like that. Then you want to make sure that your gold is allocated, segregated, insured, privately audited, and stored in a country with no history of the government confiscating its citizens' gold. And if you want to buy gold yourself, but you don't know where to start, I've got plenty of affiliate links for the services and resources that I use and recommend linked in the description below. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.